Good morning, Chris. How you doing, man?
Hey, good morning. I'm great. How are you?
I'm good. This is Brian Jones. I'm here with Chris Hood, a professional trader, world's most interesting man.
After today, man, rabbit holes on YouTube. You got to be careful what you tap. I've worked out you've got to really tap carefully on anything connected to this metaverse nonsense.
What did you
Because
where
I
did you,
tapped,
where did you end up?
well, I landed up tapping on a Steven Seagal video, and then I landed up watching dictators' bodies getting exhumed and reburied. And oh yeah, it's nasty, man. You can get sucked into these rabbit holes, and it's a horrible way to wake up.
Did you like fall asleep and wake up, or was there like a direct connection between? Because I don't see the connection.
Oh no, it was just I don't know how it happened, man. I was watching a Steven Seagal video. He's got fat, like he's really got fat, and he dyes his beard. Like and one thing my mom always taught me was never trust a guy who dyes his beard. So I don't trust the guy who dyes his beard. And he's having this video with this guy, and for some reason, I must have tapped on it sometime when I was either unconscious or something. Where now all of a sudden I'm getting this feed about dictators' bodies. And I was watching, like Stalin getting reburied, and oh, it was horrific. And you sort of go through this loop of consciousness. Like the one thing, like, is this something I'm really interested in? I don't know. It's just like you sort of go weird. But yeah, crazy way to start the day is watching
Says you
Seagal
need to
videos.
watch this.
Yeah, absolutely. I'm a bit surprised, man. Some of the nonsense and garbage that's out on YouTube, man. It's the Wild West. You'll be surprised at what garbage you can find on there.
Oh
Yeah,
yeah. So
crazy.
where we at in the market today? Like we've got, I know we had a little bit of a pullback yesterday.
Let's, uh, let's share the screen and I'll show you, man. It's been an interesting couple of weeks, right? So we started seeing a degradation in the market back here in that was around the 1st of April. You can see the squeeze started to fire to the short side. Our volatility band started to move gray. That means we can't be bullish. And we sort of saw these fails at the 21 and the 34. And we've seen these divergent high bars print as well, which indicates lower prices to come. Squeeze is sort of coming around the corner. We're sort of running out of, there's very little, it's hard. I was writing an email to people the other day saying, look, I can find multiple reasons to be bearish. Red volatility band below the 21, below the 34, squeezes and positive, blah, 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 all of that stuff. But you've got to realize where things will turn bullish. This is the important part, is you've got to be careful about trying to call a bottom to anything. A lot of guys got suckered in over here. When you see this big sort of wicking candle here, and it goes up, everyone says, oh, that's it. Everything must be all okay now. And they get in over here, and they get this. So this kind of pattern where you see that happening, this is very common in these kinds of markets. So be careful. I mean, at the end of the day, if you want to trade bullishly, you need to wait for this to break 445.80. We need to get back to the 100% retracement level. We need to break the 21 and the 34, which is up here at 448. Then we've got to deal with this area of resistance, and then we can start being bullish somewhere up here. This is the 195-minute chart. Okay, this chart here is the 195. So lots of reasons to be, looking for, a turnaround. The turnaround is not going to happen here. A lot of guys are going to get suckered in, try and call a bottom, and it falls down. I don't think we're going to get into this space here, this 434, 426 area. I don't think we're going to get there. I think we'll run out of steam here. I think we'll see our stochastic starting to turn around, and then we can move to the upside again. If we look at the intraday, you can see this gradual sort of bleed here. You see where it breaks the 21, and then it's just sort of, this is all half-hour candles, right? Lots of squeezes firing to the short side. You've got this momentum that pushes it up to the 21 and then fail. So you've got a lot of fails at the 21 on the 30-minute. On the hourly, you've got some short triggers here on the stochastic. Here was your break of the volatility band, and then it's just this bleed that happens to go down. There's the short trigger. Now this divergent low, remember how it works, right? Is you can't really go bullish in a bearish trend, right? So we're in a bearish trend on the 1 hour. I don't think we're going to be seeing higher prices yet for a bit. It needs to break 441 before we can start getting bullish on the hourly. And then on the daily, our long close was triggered. So it's tough. I would say this market is a lot harder to trade than people think. You know, you're going to get suckered into buying, you know, buying the dips on these kind of patterns, and then you get killed. So is it going to happen again?
If you go short and there's a bounce, you'll also get annihilated.
And this is a thing where you've got to probably just sit back, right? Now, this is the interesting part. The market's doing this. And I was telling people yesterday, there's still trades. There's still trades. I'll show you a couple that we're in at the moment. Let's look at IPI. So we've been trading this now for, since this move over here. You can see volatility band change color, divergent low bar, higher prices, squeeze firing to the upside, 1321 cross moving up, divergent low bar, divergent high. We didn't get that play out entirely correctly. If this candle had wicked a little bit lower, it would have played out. Same with this one, but this has got momentum on its side. If you look at that setup, would you rather trade something that looks like this in this sort of green volatility band that triggered back in February? You want to trade something like this, or do you want to trade SPY that's going down? You know, this is a much safer setup, right? It's a much easier setup to have a look at. Let's have a look at John Deere. This is another one that we've been trading. Change of the volatility band, break above the 21, moving up, right? So what we're looking for now is it broke that 100% retracement line. The next level is here at 460. So you can see the squeeze is a low compression squeeze. We've lost a little bit of momentum, but our stochastic is still green and our volume is still positive. So this is probably going to go here. Now, it might come down a little bit, then it might go up. It might come back down to this 430 level and then go up. So we've been trading this for a bit. And you can see the alignment between these three time frames, all signifying the same setup. It's the same trade, right? Green volatility band, all trending up. Let's have a look at target. We got into this one yesterday. So yesterday we got in. Here you've got some compression starting to form. We had a major sell signal, but our volume started to increase. So for us, what we're looking for is maybe we've got a stop line here at around 236. Our position is small. If it pulls back here, we'll exit. If it continues to move up, so we could see it move up. We've got an hourly divergent low, so that means higher prices. Our 30 minutes also saying a divergent low, higher prices. So we could see something happen on the intraday here. And our daily chart, look at that for a pattern. Squeezes fired to the upside, moving up. So there are setups. It's just, you know, the hard thing for most people is they tend to default into trying to catch the bottoms. Excuse me, this is getting a bit warm. So
I've been staying away from the individual stocks. I've got a few trades on individual stocks, but mostly just doing the index trading because of the earnings.
Yeah.
Look,
the earnings I think that's the safe way to trade, is to go for the setups on the ETFs, but there's nothing really attractive. Okay, let's have a look at some setups from the ETFs, right? So if we look at XLK, let me just switch this, make it a little easier to read. So this one's got a little bit less information on the charts. So here, if we look at XLP, yeah, oops, this one, yeah. So XLK, if we look at technology, you can see that it's still, you know, this is not going up. This is coming down, right? We've got these three minor buy signals that we have over here. Squeeze momentum to the downside is starting to slow. Could this reverse? Yes, it could reverse. But you are vulnerable while you are in this gray trend to intra-trend reversals, right? So you could find it bouncing and then go, oh, you know what? Everything looks a little different, right? People got suckered in here and then killed. And then they got suckered in here and got killed. So be careful, you know, also where you've got these gaps. These gaps are going to have to fill to the upside as well. So what happens is people go long and they get killed. Then they go long, then they get killed. So then they go, you know what? I've gone long twice and I've lost. So let me go short. Then they go short and then they get killed on the upside when these gaps start to fill. So it becomes a hard thing to trade. I would just say to you, stay in line with the volatility trend. If it's red, you should be trading in that direction. Here you've got confirmation at the 21. There's a fail. Here's another one. There's a short trigger here and a short, a gray volatility band here. So you've got gray, 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 gray. Very hard to be long technology at the moment. Then if you look at XLY, so this is the Amazons and the Teslas. This is going down. Again, gaps. All right, all of this needs to resolve. You're not going to see a change in this until you get green volatility bands on the two intraday timeframes, together with the daily. You're going to need to cross over the top of the vol band. So on the 195, we have to cross 182.44 before you can be bullish. So you're only $3 away. That's not hard to do. You know, we're maybe 1 or 2 days away from a setup. But a lot of these sectors are just damaged. It's just trending in the wrong direction. If you try and call a reversal, you need 2 closes above the 21. And we don't get it, right? There, it hit the 21 and failed. Here, you need to have 2 closes above the 21. We don't have it. There's the 21. We're below the 21. Here, we're below the 21. Here, we are on the 21. So on the 30-minute chart, you may find some intraday stuff coming out, but you know,
I'm just sort of writing. I'm not worried. I'm just writing the X. I've been in XLE, XLP, and I've got XLV as well.
Look at that. Would you say that's going up, or would you say it's going down? Much easier to trade energy than it is to trade anything else at the moment, because higher oil prices or higher energy prices are certainly not going to disappear overnight, right? So here we get a little bit of a pullback at the open. Yeah, it's okay. Squeezes 5 to the upside, trending strongly on the stochastic, volume positive. Green, green, green. Okay, XLE remains a key area to stay in. If you look at XLV, slightly different. So XLV, bit of a fail here, cross of the line, the trend line, went into a gray volatility band over here. Here you can see there's an entry on the daily, but it's below the 21. So we have to wait for it to get back above the 21. We've got a lower open this morning, gray volatility band, and we're going to get a gray volatility band here. So the only thing that's actually still positive here is the day chart. Again, it just comes down to, well, what are you trying to trend? Well, the thing is, the trend was very strong before this fail. So if you've got a married put, for example, and you've got nothing at risk, I think we've got a negative risk married put that's in play. I don't really care if this falls to 0. I just exercise my long put, get all my money back, make my profit and move on. Because I think that this trend will restore itself. I think that this will come back. So it will bounce, come back, get above the 21, back above the range line, and then carry on moving this way. You know, the thing is, trying to call, I don't like it when people say this is what price is going to do, because that's just a bet. It's not, no one knows. The market doesn't care what I think. What I'm trying to look at is, what is the most probable, what's the most probable outcome of what we see? Most probable outcome in this scenario is lower prices, because we've got negative momentum, okay, to the downside. So we've got momentum to the downside, stochastic has lost structure, it's below 0, and volume has declined. Without those 3 things being bullish, it's hard to be bullish, you know.
What about this relationship to the 34 as a
Yeah, I think with sectors, I found for my own trading that trading the 34 EMA, where sectors are strong and in positive structure, tends to work well, right? The EMA, the 34 EMA, tends to be a very generic, middle of the line kind of trigger point for a lot of funds. A lot of institutions will look at the 34. Some smaller institutions that trade, you know, more liquid books trade on the 8. You've also got the 15, you've got the 21, you've got the 34, the 55, the 88, the 100. There's a whole series of, you know, levels and types of moving averages that sort of trigger an event, so to speak, right? So the 34 for me is a sort of middle of the road kind of, it's not the overly aggressive funds, it's not the huge guys, but it's a general way to look at it, right? So if something was attractive at the 8, it's going to be even more attractive at the 13. It's going to be even more attractive at the 21 and even more to 34. So for smaller investors, what you would want to probably look for is if you're in a trend that's green, right? So if you're in a trend where there's a green volatility band, and the 34 or the 21 is inside a green band and the price pulls back to it, that's an opportunity to add to your position. But the thing that happens to most people is they don't plan this ahead of time, right? So they overload the first position. Position starts to break. They then go, damn, maybe I should add to my position. They haven't planned any of this. This is just random acts based on what they see on the chart. They see the 21, but they don't recognize the volatility band. They don't look at the trend. They just see the 21. They go, let me average down on my trade. But the trend's already broken at the first point. They don't have enough control or indicator telling them that the thing is broken. The trade is broken. So what they do now is they throw good money after a really bad idea. And that trade goes worse. They might have lowered their break even, but now you've gone from having a position that's small and tolerable to being slightly more painful when it goes wrong. And then it goes wrong the next day because the trend is already broken. It's far easier to use your volatility bands to exit the trade at the first sign of weakness and come back when the trade develops strength again. Where will this develop strength? Over here. Once it breaks the top of this volatility band at 139.90, this will change to green. This should be coming around the corner. That should be past zero. You can then trade it again to the upside. What happens, what I've seen a lot of people do erroneously is they hope to be right. Traders should never trade to be right. You don't want to be trading a position going, I have to be right. Therefore, I'm going to average down and see what happens. Don't trade like that. You're guaranteed to lose. Over time, you will lose because trading to be right does not mean you'll be profitable. I've often, back in the old days, when we still had ox wagons and no cars, you would trade in such a way and you go, oh, you know what? I was fundamentally correct. The price did exactly what was supposed to happen, but you had the wrong strategy and you had the wrong option. No matter the fact that you were right, you still lost money. And that was one of the things that really pissed me off when I was first starting learning how to trade was, but I was right. How come I didn't make any money? I did exactly what you said. I did exactly what you told me to do in the books, but I didn't make any money. Trading is about being profitable. It's not about being right. So if you're trading to be right and you're holding on to something so that you can, record a win, that can be problematic because it's better to just exit the trade, save yourself the capital problem, come back. If you really want to trade this, just come back when the trade is set up more correctly. You might have been, you might land up being right, but just not right now, and it's almost like if you've got a mindset of you're going to make mistakes. And sometimes we get into trades early. All right. Remember, in trading, some days it pays off to be 1 day early than 2 days late. That you miss the moves, right? So a trade that we did yesterday, which I think I might have been a little too early on, we'll see today, is this one, right? So look at the setup and you'll see, right? So we have a divergent high, which means the price could come back, change of the volatility band above the 21, trend has changed, squeezes fights, stochastics moving up. I've got alignment on my hourly, my 30-minute. Look at my day chart. You see how the day chart, I've just crossed the 21. I might be 1 day too early here, but I'm happy to be wrong if that reverses. If this reverses today and we close below this line, close below here, I've even got my early warning sign over here. If I close somewhere down here today, I'm out of this trade. I'm going to get out of it. And I'll watch this because the setup that I'm trying to trade is this switch on the 195-minute chart. That's what I'm trying to trade here. See how the squeeze, the stochastic, everything's lining up. So rather trade what's lining up than trying to trade to be right. It's, if I'm wrong on this, I'll take a $50 loss and I move on. I don't, I'm not gonna get too concerned or too worked up about it. But it's important to have, the positive trades, the ones that are going to work. There are a lot of setups that are working at the moment. Did we look at DE? I think we looked at DE. Here, you want to be trading this kind of setup. Look at the squeeze at the bottom. Look at the move above that line. Look at the vol bands. Look at the signals that we're getting there. Long. All of those triggers that are happening here in that squeeze. Look at the volume. Look at the 30-minute. Look at the hourly. Look at the daily. That's the kind of setup you want to trade. You've got multiple signals. So what we know in our trading plan is that when we have moving average crossovers with squeezes firing, these little dots, with the stochastic that's trending, there's a high likelihood that there's going to be a move here. So we've been in this trade since that dotted line. So we got in just here on that first signal. We started building our position, building, and now it pays off. So that's the way to trade. That honestly, if there's a safer or better way, please let me know. But this has come from my experience. You want to trade based on setups rather than, trying to be right. It just doesn't work. It's like martial arts. You go and learn crappy, bollocks stuff and think it's going to work in a street fight.
Yeah, it doesn't. Also, trying to control or plan out every detail of the actual fight in advance is a futile endeavor. You just have to kind of roll with what's going on.
Absolutely. So this is the same. It's like I know what to expect. And as soon as I know what to expect, if something happens against my expectations, I can acknowledge that and get out of the trade before it becomes a financial problem. That's the better way to trade. Then the price must go here. And then the price doesn't give a crap what you think, goes somewhere else. And you go, no, it must go there. So I'm going to hold on to it for a little bit longer. And then you lose everything. That mentality is a very, very dangerous thing for traders. Very, very dangerous. And it doesn't happen to people who've lost a lot.
Some people don't.
Sorry.
Some people just don't. They can't handle being wrong. It's like, maybe it's an ego thing.
Oh yeah. A lot of traders are like that. You'll often see people, criticize people's methodologies. I often get feedback like this. I use too many indicators. Okay. What's it to you? At the end of the day, if I make money and you make money, does it mean you were right and I was wrong? No. You have to trade in a way that makes you comfortable. What makes me comfortable is a process called confirmation. So if I've got multiple signals telling me the same thing from different angles, right? So remember, your on-chart indicators, so the ones that sit here are different from the ones that sit here. They work in two totally different ways, but when they both come to the same conclusion, so my on-chart indicators are lagging indicators. They tell me what's already happened. My leading indicators tell me what's going to happen. When I've got synergy between those two types of indicators, I have a high probability of winning on a trade. Whether that takes me in these indicators, there's a lot here, right? There's a lot of information that sits behind these indicators. What you're seeing is the output of those. But what works for me is that. Could I trade with less? Probably. Could I trade the same way? I don't know. But there's nothing to say that I'm wrong and someone else is right, or I'm right and everyone else is wrong. I always say to people, there are many, many ways to get to the top of the mountain of profits. Many, many ways. There's nothing to say my method is the only way. But too many people on the internet and YouTube and what have you are too binary, in their responses to things. It's like, no, that's garbage. You need less. No, I need what I need in order to make money. Well, if that is 20.
I like that idea that, the only rule to proof is success. If you successfully make money consistently, then what you're doing is right. But that's a pretty good epistemology there.
Yeah, and it's almost like I'm certainly not one to say that my method is the only way that works, because there are traders out there who trade very differently from me who make far more than I do. So it would be pretty arrogant for me to sit back and say, oh, well, my way is the only way, everyone else is an idiot. And this, unfortunately, comes out on the internet. A lot of people are keyboard warriors. They'll come out with comments and feedback that's pretty darn critical. And it's horrible. I think it's a very disingenuous thing, because a lot of the people who actually criticize or complain or have, bad feedback never really do anything positive for the world, right? They're not telling you why. They're not saying to you how. They won't do any of that stuff. And
I think you'd be a great cult leader, though, Chris, personally.
What's that?
I think you'd make a great cult leader. I mean,
no.
Doing that, you could, get you some like strange clothes and sell your bath water to people. That
Oh my God! Well, that could work. I mean, we'll just trade. We'll trade some futures then on the profits from the bath water.
I was just thinking about. I was reading about the the people in Japan that released that gas into the subway.
Shinkyo, what's
Yeah,
it?
Shinriko or whatever.
Oh, Shinriko, yeah.
Yeah, the guy was selling his bathwater. I was just saying, it's just an idea.
Hey, that's an idea. We could bottle it up. We could label it. We could market it like a new Red Bull kind of thing.
Yeah, it's for traders. It's like got caffeine and Chris's bathwater.
But it's a really interesting dynamic that's happened in the world. Is that you land up in a situation where everyone's an expert, everyone's trying to get to the top of the mountain, trying to prove that they're a messiah of some sorts. And unfortunately, it doesn't work like that. And it takes a lot of sometimes bad mistakes. And trust me, okay, I've believed in the gurus at some point. When I started trading many years ago, I read every single book written by every single self-proclaimed expert, and every single book lost me money. So how's that possible? I did it exactly the way that they told me, and I never made money. And it's because the way in which the market works is it doesn't give a rat's ass what these people say. The only way you can trade is what works for you. So if my methodology has 5 indicators that all need to say yes, 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 green, 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 and 99.9% of the time when that happens, I make money, who's to say my method's wrong? Works for me, right? So I think, the big message for people who are learning how to trade is follow what works for you. Don't follow someone else. Like, you can try and copy what I do, and that's, awesome if you can, but all of us are different. And all of us have different ways to get to the top. I found this way of describing it very much like martial arts. Because if we all sit at the bottom of a mountain and all of us want to get to the top, there are many, many paths to get to the top. But once we get to the top, everything looks the same. Everything looks the same. So there's no one saying my path to the top is better than your path to the top. You might have chosen a more rocky path based on what you understood to be the better path to the top. Halfway through, you might go, no, I'm going to switch to that guy's path. Cool. Do what works for you. Don't try and think that, if someone sits there and goes, oh, you should look at this, this, and this, and those are the only indicators that work for you. Well, they might not work for you. And then what do? It's a really, really hard part of the learn in trading is working out your system. What works for you? What makes you money consistently? Not what's right, not what your friend thinks works, what works for you. You can take one good trade, give it to 20 people, and still get 19 different answers. One guy makes 10%, one guy makes 20%, one guy makes 100%, one guy makes 50%. Who was right? They were all right. It worked for them. So what I try to work on in terms of my methodology was keep it simple. And, if I've got lots of green, and I can see the alignment between the timeframes, I do the trade. I don't sit and try and argue it. I've learned not to argue with unemotional data streams. It doesn't work. So you've got to try and find that. And I think for traders, it's really important to find the methodology that keeps you, it lets you sleep at night. It lets you be profitable. It lets you enjoy yourself. It's easy to maintain. That's the way I like to trade. I keep it simple. You've got the tools, bang, it's green. I do the trade. I don't argue with it. Then what trade you do, long call debit spread, put spread, butterfly, all of those types of things. Those are slightly more complex. That takes experience to understand, okay, well, that's set up over there for me. I would probably here, if you look at the bottom, I've got a 65% probability with an amplitude of around 2 for an average period of 15 days. This to me is a call debit spread and a long call. That would give me the max benefit out of that kind of setup in terms of the numbers. So my price target that I'm trying to hit is this 460. So I've got to give it enough time to get there. The average time is 15 days for a trade. So I'm going to make sure I go out 60 days in my expiration of my options. And I'm going to just drag my trailing stop behind my position as it closes above these lines. And when it falls back and breaks that line, I exit the trade. Nothing more complex than that. It's the hard part is the patience that comes with this. You've got to be patient. It's not going to happen tomorrow. It might take a couple of days. It's going to take at least 2 weeks.
So any thoughts about, in general about earnings, anything that you're looking at
you know what, earnings for me historically have always been a bit of a crapshoot. And I think earnings for me tends to be, you don't know the extent to which something has been priced in. We don't know. I can't tell you just how much has been priced into the market. And remember this, earnings, you know, guys come out and they say good things and the stock sells off. You know, so there's never really a correlation between good news and an increase in price. You can often see good news coming out in earnings and a price drop. So for me, I would look at it and go, if I've already traded and I've already made money on a stock and I've got earnings coming up and I've got no risk capital in the position, then I might hold through earnings because I'm not risking anything. I might be risking some of my profits, but I'm not risking my capital. If I've got risk capital on, I have to make sure that I've got enough time on my trade so that if things sold off, it had time to recover. If it breaks and, you know, the structure loses, I will exit the trade. I don't sell credit spreads into the week of expiration. Like, you just don't do that because they don't benefit from the theta decay is offset by Vega expansion. You don't really create a winning trade that way.
I have a question. Are there are lots, we've seen a lot of sell-offs with I think Google and Facebook, a lot of tech companies have sold off. I mean, I'm not asking you for a hard and fast prediction, but just what do you think? I mean, if you just had to guess and make a call, like what would you say? Do you think that you're going to see people picking up? I mean, they're so sold off. Do you think that some of these companies like Apple and Facebook and Google are going to drop even more, or do you think you'll see a rise after earnings?
You know, it's a really hard sort of assumption to make that.
Just a disclaimer that you don't have to. This is not your necessarily. Don't take this as trading advice. It's gambling.
Okay.
Chris just said it's gambling. So, but if you,
all right, here's the way I look at it. Could these things sell off? Yes, they could sell off to zero. That's the extent to which a sell-off can take place. It could go to zero. Everything can go to zero, right? There's no rule that says it doesn't have to go to zero. Will it go to zero? No, it won't, because there are too many people that have already bought it, right? There's this liquidity that sits in this price, right? People are going to buy the dip. There are always going to be people who go, oh, it's so cheap. You know, these fundamental valuation kind of guys, they always look at it and go, let's buy the dip. I'm not a fan of that stuff, because buying the dip takes away the element of the emotion behind the sell-off, right? These stocks are completely linked to 10-year interest rates. That's what's happening. As soon as 10-year yields start to come down, the prices are going to move up. It's that simple. So can they carry on going down? Yes. As long as interest rates keep going up, these stocks are going to get hammered. So for me, it's just, you know, it's pretty simple. Wait for the reclaim of the 21, wait for a break of the vol band to the upside, let it change color, trade it long. As long as it's underneath the 21, I don't want to touch it. I might short it when it gets back to the 21 if the squeeze is negative and the stochastic is negative. It might be a short the rally to the 21 and then it falls back down again. But don't make the assumption that, yes, these things are so oversold, now it's time for them to rise up. At some point, that will be the correct way to look at it. But you're going to need to know at what point will that happen. The volatility band needs to change color. You know, in my system, it becomes very unemotional. It's like, yeah, this could drop another $30. Apple could drop to 130. I have no idea where it could go. I know is that as long as we've got downward pressure in the squeeze, our stochastic is also negative and our volume is negative. It's below zero here. This is going down. And it's not going to be changing that direction until it breaks this level up here at 170. It needs to get back to 170. Possibly above that red line here at 173, and it needs to be going that way, not this way. So, you know, Apple, Facebook, Google. Google is a different kind of stock. I mean, Google, you know, I'm accumulating Google shares based on the stock split that's going to happen later on in the year.
What typically happens after the stock splits?
Just liquidity. It's really a liquidity event. It doesn't change the material valuation of the company. It just says, okay, well, now more people can trade the stock.
Does that usually bring an increase in price, though? I mean,
it does, because it brings in a whole lot of demand, right?
Yeah.
So a lot more people are now going to be able to afford the stock. And what I think that will do is it will change the way in which options are priced. So once you start seeing this expansion liquidity. You're going to see a lot more interest into the stock, and that's going to push up price, and that's going to make call options more expensive. So if you're selling selling covered calls on Google, once the stock price drops down by down by the factor of 20, I think that's going to be a pretty good idea for the remainder of the year. Amazon, same thing. Facebook, I don't know.
Amazon's split is 21 as well, right?
Yeah, Amazon's going to do the same. I think what's going to have a lot of, I don't think it's correlated so much, but it is, if it's in the news, there's always a degree of emotional correlation. This Twitter battle between the board of Twitter and Elon could play out in very interesting ways. I mean, a lot of people sort of look at him as the savior of the world kind of thing. And I go, why don't we ask that to the bondholders of Solar City and ask them what they think of Elon Musk? And, maybe he can explain how bondholders got a shaft deal there. But, many people weren't even trading at the time when Solar City went under. That was back in 2007, 2008, somewhere around there. Most of the people who claim to be, Twitter gurus or whatever it is, weren't even born. This stuff happened way before they started getting into the market, but they forget about it. I'm not a fan of the guy. I think he's been handed a lot of opportunity that, I don't know, but that's just my personal opinion. I think it's going to play out.
Interesting stance he's taking. I don't 100% believe that he's not in it for the money somehow.
Look, I think, I don't want to, get on the guy's boat. I mean, it's just, he is who he is, right? You can't tell me that a billionaire doesn't have an ego. I don't know, living in a one-bedroom apartment, pretending to be the sort of hermit existence. I mean, Elon Smith lives like Jack Dorsey's beard. Like, this is the way that I see it. Jack Dorsey's beard puts him he looks like a bit of a homeless guy. Homeless guy with a few billion. I don't know. I think that we idolize the wrong people in society today. And, he's one of the guys I certainly don't idolize. Look at the way that he treated the Solar City bondholders, and you'll see why. If humanity can get over this idolization of wealth, the vulgarity of wealth, and it can stop idolizing celebrities and all of this stuff, I think the world will be a much better place. But unfortunately, we're not clever enough to do that. I don't know, maybe when you get to my age, you sort of start realizing the frivolity of all of the idolization we do. But, there are so many good people in the world, and we lose a lot of good people who don't get recognized for the good that they do. And we tend to, spend more time watching E-News and, this movie star, wore this dress. I mean, who gives a rat's ass what they did? It doesn't change the fact that people are losing their homes in the Ukraine and stuff like that. It's a sad state for the world that we are where we idolize the vulgarity of things. It's just vulgar. I find wealth vulgar. I trade because I enjoy it. I don't trade so that I can throw my P&L onto the internet and make myself look better than other people. I hate that. I think that creating a desire of jealousy and FOMO and, oh, why can't I do it kind of thing, I think is wrong. We shouldn't be doing that. We should be making the world a better place, not a world filled with envy and things like that. So it's sad. It's come to a point where, unfortunately, we respect the wrong things. We don't respect the humanity of people enough, but we only respect them if they have money. It's a weird world, and that's unfortunate. It's just.
Yeah. No, I agree. But
I think we need more people to be doing Brazilian Jiu-Jitsu and Kyokushin Karate. And the reason is because in those two, you're going to get your head kicked in. You want to be, the one thing I love about the martial arts that I do is that I can spend 3 hours a night not thinking about the fact that the Kardashians got rich off a sex tape.
Like, it's also like when you share the mat with somebody, it doesn't matter if they're worth $100 or $100 billion, roundhouse kicking to the neck is the same.
Yeah, and I think that this is where you have to strive to take the world. Like, we have leaders that don't allow us to do that. We live in communities that don't respect the good that people do. They only respect money and power and all of that stuff. And you got to ask yourself, how can the world carry on like this? It's not right. We lose so many good people that have made such a difference in the world without them being recognized for it. But yet, I've lost a very close friend this week, and you have someone who passes away, but then you have, clowns like Putin that stick around, and you got to ask yourself, where is the justice in all of this? And wealth distribution is the same thing. You have a guy who's got enough money to solve world hunger, but he doesn't. It boggles the mind. I'm always amazed at the worship of wealth. I don't think it's right to do it. Like, we become really, really shallow as a species. We are not developing, we're not evolving to a higher level of consciousness by looking at these celebrities going, I want to be like him. I don't want to be like them. I really don't. It's just sad. Look at me ranting. I'm telling you, ever since I had COVID, I have ranted more than anything else. I think it's COVID. I blame COVID.
That's okay, Chris. This is that's what we're doing, man. We're just talking about stuff. Well,
I think that the world will certainly be a better place in the years to come. I hope, and I hope that the consciousness that comes from people wanting to help others, and this is the way that I've tried to build my tools, is more around helping people. There are so many people who want to trade, who want to learn how to trade, who want to become independent, who want to become, less dependent on others, kind of thing. And I see my tools and the way that I trade as a vehicle to help people get there. That's, if I can give someone the opportunity, I'm not telling them that they're going to make it work. I mean, for some people, this might be too complex, but at least give them a chance. We don't give people chances anymore. And this is why I want to do this. It's more because I think that people deserve an opportunity. So hopefully someone out there who's clicked on the button, subscribed, and watches this, hopefully this makes a difference for you.
Yeah,
that's
definitely
what I try and do.
Guys, definitely join the channel here. Click subscribe, like, throw your comments in the feed, and check out Chris's product over at Rogue Investing/Alpha, and get on the newsletter and start trading with us. So, Chris, I'm gonna let you get to the market today, man. Hope you have a good one.
Thanks, man. We'll catch up next week.
Absolutely. Take care.
Ciao. Bye.